Hi, it's Brian Thomas, host of the 55 KRC Morning Show, here for another edition of Rethink Healthcare, together with my dear friend John Ruhlman from U.S. Medical Plan, who's going to find you medical insurance that provides you better coverage for less money. And I know that's impossible to believe, but we learn about it every single week. It's just been a real wild ride learning about how many people he has benefited and how much money you can literally save with better coverage. You can find it online at usmedicalplan.com. The number is 877-410-4321. John Ruhlman, always a pleasure talking with you.
Brian, this is the highlight of my day.
Oh, come on now. Don't blow smoke up my skirt, brother. Had a great time talking with Austin last week, a real-life example of a group that they were paying $1,000 a month ahead, and you got them down to $350 a month ahead. This is a small business, concrete business, 25 employees, and Austin obviously very happy about that, but the key point being better coverage. And the real cool thing I found out about that, and we'll kind of parlay it over to a different direction this morning, is that Austin approaches you about group coverage. You then look at his situation, and then you look at each of his employees, where they are on the likely or unlikely to need medical coverage spectrum. You got a bunch of young, healthy, concrete pouring guys. They don't have any claims experience. That you look at that, and you get them a policy. Then over here, you have some other employees. They may have some health issues or different circumstances. You get them different types of coverage, all under the umbrella of his concrete company, but looking at each individual employee so they can best manage their insurance coverage. Very cool. So moving away from that one illustration, how does one determine if their coverage is right? Because we just got done with open enrollment, and you say it's not over with open enrollment.
Oh, no.
It may have just begun. So how does someone even know? Like, they're sitting here going, wait a second, I hear about all these great stories and all this money being saved. Well, I just signed up with Anthem or whatever major coverage they got through their employer, and I'm facing $5,000 out-of-pocket liability. Am I done? How does one know?
I mean, the problem is you don't, right? I always say that the worst time to find out how good your coverage is when that doctor walks in and goes, this ain't covered, or it's going to cost you this amount, right?
Right.
And you're like, oh, my God, I didn't buy the right thing. So what I tell most people is the first thing, and I will preface this, I will never take you out of something better, ever. If I feel your plan's the best thing for your family, I will absolutely tell you that, and we'll walk away, and I want you to feel confident that we had a whole intricate, detailed analysis, and you're staying where you're at. And I've told people that. I tell people that every week. It's not my job.
Hey, man, I wouldn't speak on your behalf if you try to sell somebody something that they didn't need. I mean, that's my philosophy of life. Be honest with people,
And it's just like the group side, right? So how do most guys approach group insurance? Well, give me a simple census: tobacco, age, employee, family, status. That's all I really care about, because they just come over there and just blanket you like, here's your rate, $1,000 a month or whatever it is, right? We go way in detail. So even when your listeners call me, sometimes they'll slide me that little census, and I slide them my census right back and going, listen, mine is a lot more intricate. I'm going to ask things like your employee's family income. I want to know who their doctor is. I want to know who their specialist is. I want to know every prescription that they're on, because I want to make sure that when we build a plan, it's geared to that employee, not just the employer. I want the employee. And of course, once I realize their risk, what pool to put them in, how to really build it out, and then I can tell them, listen, the major medical, here's what we're going to do for every single employee, laid out, and it could be Anthem with one, Med Mutual with another, or CareSource, Embed, or United Healthcare. It doesn't make a difference. I could have 12 different employees, covered by 12 different insurance major medical plans, because that's what made sense to them. But don't think it's going to be confusing to the employer.
Right, and we talked about that last week, because
that's
part of the problem with me, because my son, when he got insured through you, and I hate to keep bringing him up, but I can see the real life example, because I talk to him all the time. I think he has 2 or 3 different insurance cards.
Yeah,
but you pointed out last week when talking about Austin in a real life scenario, you just walk in and you hand the provider the different insurance cards.
Yeah,
and then they process it, and if that doesn't work, there's an app.
There's an app for that,
and you can submit the claim on the app,
or there's a hotline for that. My hotline. If you
just call you.
You just call my office, right? I mean,
I'm confused.
I'm confused. I lost my insurance card. Which one do I have? I run into the problem because I'll change my insurance every 2 or 3 years. So even when I give them the new cards, right, they'll turn around. I get a bill back saying, well, your insurance didn't pay anything. I'm like, well, of course it did. I mean, I have really good coverage. And then I realized that, well, they built some company I had 3 years ago because they didn't update my system or update my cards. So then I know how to work those angles and work through those processes. I always tell clients, listen, if you get into a situation, you're like, oh, I got a bill. Why did I get this? Why am I not paying? I'm like, take a deep breath, because 90% of the problems from our side, from what we see, usually happen from the provider not billing properly or something along that line. So we'll take on that on, but kind of going back to the customized coverage, that's our goal. That's the main goal, because I feel like once you customize it, if you have a custom car for every single person out there, and it's not just that one car that everybody's gonna, blanket, the model, the Ford, it just goes to the press, like boom, 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 boom. Here's the car you get. What color do you want? That's not the way to go, right? I want to build you a vehicle and going, what type of engine do you like? Well, I'm a Ford guy. I like my Power Stroke. I want a Ford engine, but I'll tell you right now, I love those new Dodge interiors.
Yeah,
they're crazy looking. I want that, but maybe I want the new Chevy tailgate. I'm gonna put that on there, and I want a Toyota tires or something. I mean, just
you definitely want the Porsche PDK transmission.
Porsche PDK transmission.
Yes.
That's right, on my diesel.
Oh wow! Well, I don't know about that.
But it's the same point of the side is no one wants to do that work. That's a lot of work for a broker to do that, but I want to do that, and that's how we can build the best plan. So it doesn't make a difference if you're an individual coming to us. We can customize it that way, or a group. And then we look at the group in a nutshell and go, hey, listen, now that we have each major medical plan laid out, all their doctors are covered, all their prescriptions are covered for each person. They don't need to change their doctors. Then we look at, what are the secondary coverages that you as the employer want to provide? It could be, I want to do gap coverage. I want to do the first dollar coverage for all my employees. I want to do, like we talked about a few weeks ago, the health matching account.
Oh, that was amazing.
A medical savings account and that grows for the employees, that has a cash benefit. They can use it for any real medical expense, braces, $5,000. I got an HMA for that. Most dental insurance ain't paying 100% on that. Cosmetic surgery.
Covered under the
I
HMA.
love it.
Yes.
I love it. My first client was a mommy makeover on that.
Really?
Yes. She called me up. She goes, I'm getting divorced, and I have a game plan for 3 years, what I want to be able to do. I'm like, how much money do you need? She goes, I need $20,000. I was like, well, it's going to cost you about $9,000 to get 20. And she's like, in 3 years I can get it done. I was like, absolutely. And that's what she did. She built out a $20,000 HMA and went and had her whole redone mommy makeover.
Makes me wonder if she'd have gotten the mommy makeover before, then maybe she wouldn't be divorced. Anyway, everybody faces
I'm not going down that route.
I just did. You don't have to. And I'll let it stop there. Anyhow, but that in illustration, everybody says, there is no coverage for cosmetic surgery, and you just proved that no. If you plan ahead, yes, there is.
Yeah.
So it's a wonderful that plan blew my mind. You park $1,000 in it, and then 3 years later, you got basically $3,000 worth of coverage that you can use for literally anything.
I had 6 people email me right after that show.
I bet.
Asking me about the long-term care piece. The long-term care piece is not out yet. That is something coming in the wind. So we're hopefully here within the next quarter, we'll have that. So literally it's the same premise. And 3 of the emails we got were, I've been trying for years. I have medical conditions. No one wants me. I don't know what I'm going to do. This could be a game changer for me. Please send me information when you get it.
Yeah.
And I think that's going to be a huge product. I mean, when I talked to Elliot about it, and he's been working on it for like the last 2 years developing it, I'm chomping at the bit because I know how bad that market is overall, and how so many of us are going to be in a situation where that can be potentially where we're going to be in the future.
And there's someone listening right now, you hear that, well, that's me. I mean, call John.
Yeah.
To talk to about your current problems with getting medical coverage, because there are solutions out there that I would think the vast majority of people don't know. I mean, I consider myself a reasonably intelligent guy, and hell, I worked for a major medical insurance company's litigation department for 8 years, and I'm married to a health insurance specialist attorney. But when you throw these concepts at me and explain these things, it's all new, and that's why I find it so fascinating and so amazing. I enjoy these conversations because I'm learning every single week we do this Rethink Healthcare Together segment. Well, explain to the listeners about why too little coverage can be more expensive.
Yeah,
it sounds like backwards in a way. Wait, less coverage is more expensive? I mean, I think we've kind of hit upon some of the points on that before.
Well, we have, and I think this really kind of comes to the place where, we get phone calls all the time, and I go, well, what's your budget? Well, I want the cheapest thing possible, right? Like, okay,
No.
well, listen, there's a catch-22 at this, right? So one of the things you have to start thinking about, especially, if you just came through the marketplace, and I get it, listen, a lot of us qualified for tax credits. A lot of us are getting very affordable insurance. I mean, I literally wrote hundreds of people on zero premium plans, and that's great because you are able to get health insurance when you probably don't have a lot of disposable income to even pay for something. So I understand that premise behind it. But what you have to start realizing is, especially those tax credited plans, like we talk about constantly over and over again on this show, is, a lot of them are families. So you're talking about $20K right now, $20,000 potential risk. So what you have to look at on any insurance plan, the best way to really contemplate, how much does my health insurance really cost? The first thing we're always going to look at is a premium, right? So just calculate that times 12, right? So you're paying $300 a month. That's $3,600, right? But then look at what your out of pocket is. Don't get the smoke and mirrors of what your deductible is. Insurance companies love to wow you with, you have a $1,500 deductible. Doesn't that sound good? Oh, I really like that $1,500 deductible. But it's $9,500 out of pocket per person. Right. Yeah. So I got the $1,500 deductible plan. Why? I just had a $50,000 surgery. Why am I paying $9,500? Because insurance companies love the smoke and mirror game. So the $9,500 is what you really are on the hook for. Well, times that by 2, right? So now we're at 19 grand. Add the $3,600 back in. Now you're over $22,000. So your real cost for health insurance this year is 22 grand. If you do everything perfect, walk into the right doctor, the right hospital, and don't go out of network, right? So yes, paying sometimes way too little can really put you in a really bad situation. And this is what I really strive to talk about with my clients is, listen, maybe you have a very affordable, marketplace plan right now. Well, what would you pay to get rid of those deductibles and out of pocket? What would you pay per month to get rid of that $20,000 kicker that's sitting there? Would you pay $400 a month? Would you pay $200? If I told you in some case it could be $150. I mean, how many years would it take you of paying $150 a month to justify $20,000?
Yeah, that's where the idea of a little bit more premium a month translates into actual less money annually out of your pocket.
Absolutely.
That's period, end of story.
Absolutely. And then we can take on the flip side of the coin, right? So let's talk about the guy that thought that, I can only get the Affordable Care Act coverage and I don't qualify for tax credits, right? So he's paying an arm and a leg. He's a guy with a family plan, paying $2,200 a month for a $20,000 deductible out-of-pocket plan, right? So, that's the guys that we really help out in spades because then we can say, listen, and again, every case is different. Not only just when we do the groups per employee, I can even do it per individual of a family. You'd be surprised how many times where someone in the family, the husband or wife, and they go, well, I had cancer, so we can only qualify for a marketplace plan. I said, well, maybe you. But what about the rest of your family? They're relatively healthy. Let's move them to private and cut your costs 60%.
Right.
Did you think about that concept? Most people don't. They go, well we got to be on the same plan. Like, okay.
That's like Austin and the Concrete Company. You look at every employee, you look at every member of the family.
Every member of the family. And it could be, sometimes it's the kid that might have some issues. Well, I'm going to make sure he's got the best coverage for his situation. And then I'm going to move the rest of the family and put them in something that's more affordable that might even have better coverage because they can qualify. The whole concept of qualifying for health insurance went out the door in 2013 when the Affordable Care Act went. And they go, everybody gets covered. Everybody gets, there's no pre-existing conditions. I hear it all the time. I was like, well, yeah, on those plans. But that's not right for 90% of the people that are probably on it. I mean, most people don't have medical issues that have to be on the Affordable Care Act. We talk to them every day, and that's the people we save a tremendous amount of money for.
Well, pivoting over from families generally to new families, I understand you get a lot of questions about new parent coverage. It's I didn't realize people were still having babies these days. Apparently, they are. Fewer are, but there are still new parents out there.
It's a rare thing, right? The funny part too is, especially when I'm talking to younger couples, right? A lot of them don't even think about it right away. They're like, oh, I need really good health insurance. I'm like, well, what's your plan for the baby? They're like, oh, well, we're thinking about it here like the next 6 months or a year, but I didn't even think about asking you about it. So we will actually preemptively ask that question because I know that's a real world situation. So, but there's so many things that you should be thinking about as a new parent, not just like, do I have enough room in my house? So I needed the minivan, right? You need to really start thinking like, what does this
You're taking me back, man.
what does this really cost, right? Because most people think it's an arm and a leg, and it can be in a bad situation. If you get into a situation where you have to have a emergency C-section or something like that, or the child gets born premature, like that's the biggest claim I've ever had was a premature child.
Really?
Yes, ever. They were in the NICU for like 2.5 months, and it was like multi-million-dollar claim.
Yeah.
So
my wife used to work in the neonatal ICU
Yeah,
at
they're
Children's
just
when I met her.
insane
Little babies,
insane claims, insane.
Oh,
and
yeah.
I mean, with the beauty of the medicine is that they survive,
Yeah,
right?
yeah,
I mean, it's where we're at today. It's just unbelievable.
it's like down to 22, 23 weeks.
Yeah.
It's amazing.
Yeah, I
It
mean,
really
talk about
is.
half the time.
Yeah, both of mine were born 1 month early. That did not result in additional claims or issues. They just were done and ready to rock and roll. So, but C-section we had one C and one was natural.
Yeah, my wife's our first was a C-section. Of course, the next two had to be. So
Yeah.
there were expenses incurred into that. So one of the things that we look at, and it depends upon each person's situation. There are really good marketplace plans that most people don't realize that actually have copays for maternity. We're talking about $500, $1,000, whole bill's done. And if you buy the wrong plan, you can be out $9,500 per person. So the mother and then the child.
Oh no!
So
Start piling up right out of the womb.
Start piling up, and now you're like, oh my god, now I can't afford the minivan, and we're gonna downgrade the house, and we're gonna be sleeping together in the same room, right? So, that's the reality. Is if that is your situation, that is a conversation we should start having. We should have a game plan because most people don't even realize there are actually plans that will actually pay an indemnity benefit, multi-$1,000s if you become pregnant.
Just for becoming pregnant?
Yes, when you have that child, then they'll actually pay. I mean, we have those plans too. So again, making sure we have that conversation before conception, we can really have a good game plan around. And then, one thing I always tell new parents to really start thinking about is, look, now you got another mouth to feed, now you got somebody else in the family. Really think about some good life insurance, especially if that's not something, if you're just getting it through your job. I help so many new parents get some really good life insurance because, again, they're usually in their 20s, early 30s. At that point, it's not expensive, and we want to make sure that your income's covered at least tenfold.
Yeah, and if you get the life insurance early enough, you can lock it in at that low rate, and it'll stay with you.
It's so cheap when you're in your 20s and 30s. You can get $1 million policy and probably pay like $40 a month.
Yeah,
but that's the time you need it. If something happens to you, you got another mouth. You got another mouth to feed.
Yeah, and then you get to my age and you cancel it because your kids are adults and, your bills have been paid. You got nothing to worry about. So I'm not here to pay a premium to make somebody a millionaire after I'm dead. Call me selfish. That's just kind of the way I view it.
Well, as in every person's situation is a little different. I've also seen the flip side where, they own their house, they didn't have any debt, but then, now we're incurring all their personal situations once they pass away. So they didn't really pre-plan for their funerals. They still got a house, and you go in there and, they're 85 years old and it's to the brim of everything. Yeah. So now we're cleaning the house out, paying all the utilities and stuff. So there is still some reasons that life insurance, I'm not saying you need $1 million.
No, how much is a cremation?
Well, you're looking at,
I'm done.
You're looking at just the finality side, but it's a transfer of assets at the end that can really get bogged down.
All right. Well, you're the insurance guy. Maybe talking me back into the idea of life insurance.
Well, if you got some money set aside, and the big thing is most people don't have cash. They're not sitting on it.
That's true. What should folks know about going on their spouse's insurance? I mean, I would imagine it's the same thing.
So
like
it's
a check under the hood kind of situation.
It really is, and there's two types of clients that we usually see in this realm. The first type of client usually is the guy that's self-employed or the woman that's self-employed, and their spouse has benefits through an employer. The easiest way to really look at it, and this is what I always tell them because they always call in and they're going, hey, can you save me money? Preempt that. So just find out what does it cost for my wife or spouse to be on that group plan by themselves, and what is my cost or my kids' cost to be added to it. And if it's relatively inexpensive, I'm talking $300, $400, $500 a month for a family to be added on. That's great. Stick with it. That's probably not a bad deal. But what we're seeing is that a lot of people are paying thousands, $1,200 for their family to be added on or something like that. That's crazy. You don't need to be there. Quite frankly, the world will do a lot better for you in the market and get you off. So we really need to talk in those situations. So that's really the first thing to look at. The other thing too is like Austin last week. He's a contractor, right? So this guy going out and doing concrete. Well, not every employer owner does carry workman's comp on themselves, and most people don't realize that employer-sponsored groups don't cover work-related injuries. Why? Because you carry workman's comp.
That's right.
That's right. So he's
I
out
forgot
there.
about that.
Yeah, most people don't think
That's
about
a little
that.
tidbit of information I used to have handily in the front of my mind, and it's just with being on radio
right.
for 17 years now.
That's right.
Forgot. It's like, oh yeah, that's right.
That's right. So somebody, especially in the concrete business or electricians, plumbers, and stuff like that, and you're like, well, I'm good. If you're not carrying workman's comp on yourself, and we don't require it here in Ohio, you get hurt, you electrified, you get hurt breaking your back or something like that, they find out it's work related, they don't pay. And you're talking about tens of thousands. So again, it might be more beneficial for you in your situation to go get your own plan. And the other thing too is, not everybody's going to be in a situation where they're going to keep their coverage forever, right? Eventually, we're going to be a point where we're going to retire. And a lot of people retire before Medicare. Why not own your own plan now? It's guaranteed renewable. We talk about that all the time.
Oh, sure.
Right?
Sure.
Guaranteed renewable, and you own it. Like, I don't want to lease my automobile from the job I work at. What happens if I go somewhere else? I got to change it up. If I own my own stuff, I don't have to worry about it anymore.
That's
and
Cobra,
if I get,
right? Cobra.
That's right. No, well, 18 months, and then it's gone.
Yeah, and then it's really, really, really freaking expensive.
Well, because you're paying full price of the company's group. Yeah.
Yes.
Yeah, but if I own my own coverage, unique concept, right? Owning my own, and then they can't kick me off. It's not a pre-existing condition at that point.
Well, and that, honestly, we talked with Austin about the wonderful idea of having great insurance coverage individualized to each of his employees and how beneficial that is because his employees are reaping the benefit. He's reaping the benefit. You can retain and be a magnet for employees. Having your own portable policy that belongs to you is like, I hate to boil it down, but that's like having screw you money. The medical insurance isn't keeping you at work. If you're miserable and you're ready to retire, you're ready to move on or whatever, it's not an issue. You've got your own coverage. You keep it with you when you walk.
And we get so many people that call us going like, listen, I just want to find out what the insurance costs me because I want to retire early. And we help those people. And then of course we're like, well, we'll follow back up in June when you do that, right?
Yeah.
But we get so many people because they're scared to walk away. I have to work a 60. That's not reality. Even in today's market, we can still do it. Yeah, I would love to have you sold you at 20 a really affordable plan that you can keep all the way till now. But it's still even affordable at this point. You don't have to work for health benefits. It's not there anymore. Trust me, they're not.
I know people who've done that.
Yeah. I absolutely. My parents did it. My father's a retired police officer. Now granted, their coverage was unbelievable. Yeah. I never walked around seeing people with $3 copays for doctor visits anymore. They have that. But their Cobra plan was like $6,000.
Oh.
I was telling him, like, Dad, you're an employee. Wouldn't you rather have had 4 of that back and got your own coverage and made another $50,000 a year? He goes, that's a unique concept. Well, that's the reality, right?
Yeah, it is.
And so we get a lot of like the state retirement, firefighters, policemen. They've contacted us. A lot of them we've helped in the transition, retiring early. We've helped a lot of these individuals get off their spouses. The other thing too is if you're 65 and your husband or spouse is still working, you should really look and see what that costs because most people don't really understand that going on Medicare is $200 to $300 a month, and your deductible could be like $240 or lower.
Oh wow.
Yeah, that's real numbers. Like right now, if you're like 65, 66, you're still on your spouse's coverage. Just think about that. If you're paying more than like $200 a month, get off. Go on Medicare. It's cheaper and you'll have better coverage. I guarantee it because you do a Medicare supplement, you can go to any doctor, any hospital in the United States. You're not on no PPO plan no more. You're not on no $5,000 deductible. Like minimize it. Like, why are you there? Because they don't know. They just don't know.
Well, and then you'll advise your clients to do something that isn't going to inure to your financial benefit. Yeah. That's because you owe them a fiduciary obligation. You are working for them.
Absolutely.
You're not going to steer them in the wrong direction. A point we made earlier.
Again, like I said, remember, the best way to look at healthcare coverage is look at what you're paying in premium and look what your out-of-pocket is for the year. Multiply that, and that's your true cost of healthcare. So my goal is to minimize that as much as possible. So every time I'm talking to you, my goal is make that less than when I found you.
Cover Cincy with a Y or I, covercincy.com. You can get the ball rolling by going directly to the website or call them at 513-800-CALL, 513-800-2255. And I'm sure the phone will be ringing off the hook after today's discussion, as it always is when we talk every week on this show. What other tidbits and fun facts you want to pass along before we close out another edition of Rethink Healthcare Together, my friend John?
So one of the things that we really try to help a lot of our listeners and clients, we actually have a Instagram feed. It's Your Health Insurance Guy. It's at Your Health Insurance Guy on Instagram and social media, Facebook. Go on there. I have a lot of really good little 15, 45-second little clips that just kind of talk about some of the things that are in the market. You can find something. It could be on anything. It could be Medicare, life insurance. It could be group side. It could be individual health insurance. It could be critical illness, the HMA. I've done quick little videos for all those things. So you just go there and scroll through that, and you might find something that really interests you. Or something that we haven't talked about on the show, and again, feel free to reach out to us. We'd love to discuss some of those great products that we put on there.
Yeah, and since you just referenced the HMA earlier in sort of a very, very boiled down nutshell version, I'm sure people's curiosity had to be piqued on that. That's the one where you're talking about paying for cosmetic surgery or planning ahead for the mommy makeover kind of thing. That again was just absolutely
just unforeseen
amazing.
medical expenses.
Unforeseen
we're going to have
expenses.
them. No matter what I sell you, there's no perfect armor I can put on you. There's no magic bullet. There's always a hole somewhere that some medical expense is going to creep through. Just like we listen to the clinical trials, what happens? You have to pay for something like that. You think insurance is going to cover for all those potential things in a lot of cases? If that's not coming through the pharmaceutical company,
right?
Not
standard of care yet.
Not a standard of care yet. So who pays for that?
Yeah, I know. You're the person looking at you in the mirror is who ends up paying for it.
That's
unless,
right.
Of course, you've got like that HSA where you've planned ahead. You got some money banked. It's trebled over a short period of time.
Yeah.
Anyway, and people like, where was that again? At your at sign or at ampersand Your Health Insurance Guy, but it's INS.
Yeah, Your Health Insurance Guy. If you search for that on Instagram, it'll pull up. But it's actually Your Health INS Guy. That's where you can find us on Instagram and social media.
All right. And cover Cincy with a YRI.com or call 800 or 513-800-CALL. Well, I can't thank you enough for helping out so many of my listeners. I know the phone's been ringing off the hook, and there's not a week that goes by someone doesn't get in touch with me and say, he did it. You're right. It was worth the time. And that's the point I always like to emphasize, not only when I'm speaking for you during my morning show, but, if I'm listening to John Ruhlman this morning and I'm hearing about, oh my God, that's real money, that's real savings. And the only thing you have to do is pick up the phone, initiate the conversation, then John will take the ball and from there and run with it. Now you can do that on the website as well by filling out the form. And I know you promise that you never, ever, ever give anybody's information to anyone else. Unlike if they went out into the brave new world that is the internet and search for insurance, that information would be spread everywhere.
Don't Google health insurance. The first 10 people that pop up there are all lead companies. They're just going to sell your information. You're going to get blasted for the next 2 years, right?
Right.
Everything that we do, you're solely dealing with myself or my agents. We keep everything in-house. I'm not going to share my clients with other agents. That makes no sense.
No,
but
it doesn't.
You're literally talking to us. And, every agent that you'll talk to, even if you're not talking to me, I hand train every one of my agents. Actually, this week we do a 3-day boot camp right after open enrollment where we go back in and I drill down all the products with them and what they should be doing and different concepts that we're dealing with. Because, again, it's not just about making sure you have the right stuff for your clients. It's making sure that I train my people the right way so they can do what I do, which is a very difficult concept. So we do this every quarter. We drill down and make sure they are very well-versed in everything that we offer for our clients.
Well, it's like having a really good financial planner. This is just like financial planning. Plan ahead. Talk with an expert. You're getting what I call, superior partner level legal work being done for you along the lines of medical insurance when you're working with John and the team at Cover Cincy. It's just amazing what you're doing each and every day. All right, one more time. This has been Rethink Healthcare Together, and every week at Sunday, 8 a.m. We'll be talking again next week with John and the team. Cover Cincy with a YRI to initiate the conversation. There's a little form you can fill out to get the ball rolling, or again, the number is 513-800-CALL, 513-800-2255. John, always a pleasure, my friend. We'll talk next week.
I'll see you next week, Brian. Thanks so much.
Take care.